What's going on? The purpose of this video is to talk about structure. All right. I want you guys to know in 2025, there are some things that are foundational, even if you're using indicators or even if you want to be the best trader in the world, some things you just can't get past. You have to be solid with understanding structure, time frames, correlations, and sessions. All right. How they play a key role in understanding how to trade, how to stay out, how to call it quits, how to walk away from a loss, how to wait after a loss and get back in. Like all of that is determined by what the structure is looking like. Because if it don't make sense, you don't make no moves. But it makes sense, you prepare yourself to execute. So with that being said, let me go ahead and share my screen and let's get to it, man. All right. Let's start it off like this. One thing that you need to know is the bigger the time frame, the more solid the structure should be. For example, if we're looking at GBP USD here on a 4-hour time frame, market could be selling off. But once it makes it to a 4-hour or a daily structure, at the least, because there are higher time frames than that. There's weekly and monthly, but we're focusing on the daily and the 4-hour here. They are like very solid foundation blocks. It's like a good ceiling, a good floor, right? Support and resistance, supply and demand. So in this case, demand is always going to be where price is being demanded for. All right. The more we have demand for price, the more it'll buy. But this is not about commerce. This is about currencies and indices, commodities, metals, right? So it's more so where the institutions are buying from and where they're keeping price from continuing if that is not their goal. Because what you will understand is on a 4-hour structure, you'll notice sometimes price will sell all the way back into a 4-month low. 6 months ago, you're like, dang, price is right back here again. That should definitely catch your attention in realizing what month, what week, what day is price returning back to retest before it reverses back up. So, because of this, it's important to understand and mark those strong zones. Because as much as price might be buying to those zones or selling to those zones, once they reach there, you might be wanting to make a decision on closing your positions if you were already in it or preparing yourself to get in the trade as it goes back in reverse. So, this is a perfect example. Looking at GBP USD, you can tell if I didn't have this zone marked up, you would definitely want to use your rectangle to mark your chart and start marking these strong zones. I usually like to make my green zones demand and my supply zones in red. So this helps me to prepare in case the price ever comes back here. I will definitely be paying attention to see how it behaves. The second thing that helps me to spot out a zone is how many times price has touched it or what information did it leave behind the last time it was there. How many times price has touched the zone or what did price look like the last time it was there? What did it leave behind? What wick or structure did it leave behind the last time it was there? As you can see, I marked the zone very easily because the last time price was here, they left some wick to reject price. And then they pulled back upwards towards supply zones. So there was clearly some demand here. On top of that, you look to your left. Oh, price was here in April too. So there's reasons why price clearly created a structure here, and it was a 4-hour demand, which was strong enough. Every time it came back here, it reversed. And we can say that for a lot of things that I see on the chart here. Right here, April 22nd, 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 May 5th, May 9th. This whole zone, this whole area, 1.3239, was definitely a zone where we saw price touched it multiple times. Price was visiting it multiple times, and they had trouble going through. There will be times though, price will have a structure like this and it sells off a little deeper, but those are the times where, hey, if you took a loss, that's fine. The probability is not all of a sudden invalid. We just got to wait to see what price does next. Because sometimes they like to go and find better discount for the institutions and central banks that are moving funds or also creating price for transactions between the currencies. So, as you can tell, this is why it was so easy to mark the 4 hour structure right here. So that's why I keep it very simple to be able to tell where my zone's at. Another example, May 23rd, price came here again in June 19th, June 23rd, and we can even extend it all the way here. And July 16th, we saw that price kept on finding its way here and it'll sell, but it just doesn't go far past it. So once you actually have had marked a zone like this, you pretty much, your job is done enough to be able to tell how you can take a trade anticipating for it to bounce off of a zone like that. And, in a span of a few hours, you will watch this thing create structure from here and start to create price action that confirms whether it's going to reverse back to the upside. So once you figure that part out, once you mark those zones, then you could come down to a 1 hour time frame. The 4 hour time frame relates with the 1 hour time frame because it is just like time. If within an hour, there's about 60 minutes, it doesn't matter if right now it's 12:27. There's still about 30 more minutes left out of that 12 for it to turn into 1. So when you're looking at a 4 hour time frame, from that time frame, you could literally mark a zone like this and then go down to the 1 hour just to see how price is developing from here. If price cannot go past this low from the 4 hour, then on the 1 hour time frame, we just wait for price to start to create structure that's confirming that a break and retest is definitely letting us know that price is not going to be going anywhere below this point. And even if it does, we will just put a stop loss below this point to be sure and still give the probabilities a chance for that trade. And as we can tell, this worked out very well. 20 hours later, a day later, put in a trade like that, you can expect, hey, if I got in at 8 in the morning off that 4 hour to 1 hour structure, we could hold that trade till the next day, 8 a.m. We're going to be in great profit. And that's pretty much how you use the time frames in understanding the correlation. Coming from the H1 time frame, you could drop from the H1 to the M15 because whatever you saw on the H1, you could follow up on the M15 just to refine and see how price is creating the structure, respecting the structure, rejecting the structure, which still gives you more confirmation about the trade. So this is how you're able to use the time frames and the correlations. And the same thing is valid too on the 1 hour. How so? If I go to the 1 hour and price starts to actually move, and we're seeing day after day, like Thursday the 6th, price comes down to retest that zone on Friday the 7th, that is also a correlation and a confirmation, which will confirm continuation. because that's why many times I talk about how important it is to understand the power of price retesting an area twice, especially on two consecutive days, especially on two business days. They're doing business, right? Exactly. So when price comes down to retest the 1 hour time frame on the second day, that is good confirmation. And if you catch it from where price retraced at, you put your stop loss below that zone and you're expecting it to continue. 4 hours minimum, 1 to 4 hours minimum. It'll definitely give you what you're looking for if there's enough volume, which is why if you go back to the 4 hour, all that price action we just saw was only just one candle, but it respected the 4 hour structure. And you can see it more refined on the 1 hour structure. So obviously the 4 hour and the 1 hour, they correlate. Okay. And we saw this in hindsight, but we could tell the correlation and how price just will come back to retest a zone. And the more times they touch it, the more times it's basically confirming to you that, yeah, if you took a trade right here as you anticipated it, it would have been a good trade. Again, price came here to retest that zone, and we all saw what happened next. They bounced off the zone, and each time they bounced off the zone, they found support. They found some foundation to keep it from selling further. All right. So that's how the behavior of demand zone structure is. And that's how you can actually take trades to the upside. The same is true for supply zone opportunities because what goes up must come down. But again, you have to also go to higher time frames to pay attention to what the behavior, the identity of a particular pair or asset class. Is that pair a pair that usually be trending up? Or is that pair a pair that once it makes it to a supply zone on the daily, it stops buying and starts to sell back into the range of the previous demand zones? Once you go back um, to the past, you'll notice the identity, the personality of that asset class. For GBP USD, for example, you'll notice a lot of times price will sell after making it to a high, a new high. But for the most part, it likes to range, meaning since 2023, we noticed that GBP USD will make it to this zone right here, 1.2059. And you'll notice that they always stop selling from here and start to buy. And once they buy, they make it to some supplies. They sell back into the same types of ranges of demand. You see it'll create ranges. When price came back to this point, you see how many times they touched it? Boom. No wonder why when price came down here, they bounced, they reversed, pulled back, higher low. And every time they respect it, they continue. So you always want to look for at least price touching the zone twice. That gives a good confirmation. So in the supply zone, you can tell in July, price came here to retest it in September, and the same reaction happened. Up top, couldn't break it, couldn't make a new high, so it sold. It sold back down to demand. And you can tell this is a demand because price touched it multiple times. So that's why when price maybe comes back to the upside, we're always anticipating price to return to where it once visited. Or if it goes to make a lower high and it can't break higher, then we're going to take sells And we're going to be targeting areas where price once visited before, or even lower than that if price is still pushing with a lot of momentum to the downside. So that's how you can mark your charts and utilize this information to make decisions on the charts. One, you got to understand structure. Two, you have to understand the time frame correlations. The stronger the time frame, the more serious the trend will be. The stronger the trend will be. The further the trend will go, the further price action will go. That's why when you see price give you a lower high on a 4-hour time frame, you can expect more than 12 hours of price action going down. So you have to expand your horizon. You have to expect a little longer of a direction out of price. 24 hours shouldn't surprise you after price makes a lower high on a 4-hour time frame. 24 to 36 hours or 3 days of price action shouldn't surprise you if you're looking at the market coming from a 4-hour demand zone that retested on 2 separate days. Because you know, once it bounces twice, it's going to go. And it's going to play out for over hundreds of pips. All right. So let me show you this on different asset classes because this happens everywhere. Look at this. This is gold right here. Let's check it out. Notice how on the 4-hour, when price came here in October, they retested this by almost the near end of October on the 4-hour time frame. And what happened next? We can expect this to sell off because they retested it twice and they couldn't break past the previous high. And when you make a decision like that, it'll be a profitable decision because you have proven data. And the probability might still, maybe the first attempt, you might get your stop loss hit, but that doesn't mean it's invalid 100%. Sometimes price might literally just touch the zone, go a little bit higher just to sweep the top, and the dust comes back down. So these are behaviors you have to really pay attention to so that way you get familiarized with what you're looking at. Notice how I very simply dragged the rectangular box to the right. Why? Because we can tell from here the reason why price sold and couldn't break any higher is because there was some supply here. And we noticed that they touched the price multiple times into this supply zone from October. And so having noticed that, you can drop down to the H1 and notice how price reacted off of it, changed the structure, pulled back into the zone where price was selling from on Thursday, and they came on Friday and retested that same zone. There's power in price retesting an area twice on 2 separate days, 2 separate sessions, 2 separate months, 2 separate weeks. All right. So this is why, even though I missed this sell, it's okay because once price breaks structure, that's the first step. The second step is going to correct and it's going to continue, right? So if I didn't catch the first sell, I'm going to wait for the retracement. And the second time it touches the zone for me to look for a potential continuation to the downside because that's what the trend is telling me. And so from here, I can come down to the M15 and just wait for it to get to that zone so I can get a better entry out of my position. Seeing that I'm doing this video right now on a Friday, this gives me the perfect scenario and anticipation for next week's trade. That's how being able to understand price action helps you to grow a foundation and the decisions that you want to make on the charts. Now, if I were to ask myself, if price is to come up here, where it recently sold from. Once it comes here, what should I do? Well, I can get into this trade, put my stop loss above this price rally to the downside, and expect a continuation. Now, you're probably thinking, what if that doesn't happen? Well, my stop loss will get hit, and I'll just wait and see if price will give another break and retest so I can decide to make another attempt. If not, I'll leave it alone and wait for clarity. Okay. So that is, in a nutshell, how you mark your charts, how you understand direction, and how to figure out the correlation between the time frames. All right. What is broken does not need to be fixed. And this is structure 101. If this video made sense to you, I'll see you in the next one. Until then, peace, love, and blessings.